Hi everyone, this is Mike of MLV Accounting wishing you a wonderful day. Today I will discuss to you the topic of capital gain. If you hold assets in shares, cryptocurrency, investment properties, or you are a small business owner and you hold shares in a partnership or as a sole trader and you hold assets also in the business, then once you sell these assets, it will trigger a capital gain. Now, if you hold these assets for more than 12 months, you are eligible for the 50% capital gain discount. So, which means that let's say you bought the shares and the gross proceeds from the shares, reduce it by the cost of the shares equals the gross capital gain, and then you remove it by the 50% discount because you hold it for more than 12 months, then you get the net capital gain. And this net capital gain, if it is a gain, you add this to your current income for the year and you pay tax according to your marginal tax rate. Now, if there is a capital loss, then the capital loss, we cannot reduce your income by the capital loss. We have to carry forward this capital loss to future years, and in the future, when you do have a capital gain, we can reduce this by the capital loss. Now, if you have an investment property and you sold it, then you have to pay a capital gain. But if you hold it for 12 months, you only pay. We can reduce it by 50% capital gain discount, and then the net capital gain is the only thing you have to pay the tax on. But if you sold your main residence, you don't need to pay any capital gain because there's what you call the main residence exemption. And so there is planning. You have to require planning when you sell either your house or your investment property. And if the asset is, let's say, in a super fund and you hold it for more than 12 months, then you can also avail of the 0.33% capital gain discount. So it is important to plan before selling. If you have a business, then the government allows us to reduce the capital gain on the business. So there are 4 or 5 kinds of small business CGT concession. First, you should be considered as a small business. Once you are considered a small business, you can avail of this capital gain concession, small business concession. Namely, one is the small business restructure rollover. Second is the small business 15-year exemption. Third is the small business 50% active asset reduction. Fourth is the small business retirement exemption. And the fifth is the small business rollover. So there's a lot of combination that we can use to reduce your capital gain if you sold your business, or even you don't need to pay any capital gain if this is properly structured and properly planned. So really, it is important to seek financial advice from your accountant or your financial advisor before planning all of these things, because it may have an effect on the tax that you will pay. So, but sometimes you have to sell assets because you need some cash flow, but then you have to understand what is the implication. So we at MLV Accounting are your partners to improve your finances, to plan for your future and your retirement, and to really reduce any tax payable by structuring properly and planning. Life is too short. We have to understand and control your finances so that you will create a life worth living. And let's talk the tax with MLV, and I'll see you at the top where we should all belong. See ya.